Hello, everyone. Today's topic is opportunity cost. We are forced to think about opportunity costs. This is because when we look at the new opportunity, we compare it with our current situation and think about what is at stake if we would go for it. The things that fulfill our wants and needs are finite that bring scarcity in an economy. We make personal choices, business choices, and collective choices differently, but we all do so based on scarcity. We can't do everything or have everything, so we must weigh our options and make the best choice for ourselves.
Economists define opportunity cost as the benefit we forgo, as we trade off one alternative hoping we make the best choice. By studying for a degree, we trade off $30,000 a year. Assuming we go to college for 4 years, we trade off $120,000 for education. But once we are better educated, we might earn $40,000 as managers instead. Concluded that not going to college is more expensive. Thinking at the margin has to do with making decisions on small changes in the allocation of resources. So one way of framing this concept involves deciding how much more or how much less to do something, with all else held equal. To make rational choices, we weigh marginal costs versus marginal benefits. These terms refer to either the cost added or benefit gained that is associated with one additional unit of a good or service. But the more important the choice, the more effort that typically goes into cost or benefit analysis. Recognizing weighing the trade-offs, thinking at the margin, considering the opportunity cost of every choice is a mental exercise that can help make the big decisions in life a little easier. This is all about opportunity cost from my side. Thanks for watching.